All right, guys, so welcome back. We're going to talk again about what happened in the stock market on Friday and just get a quick feel for that. Basically, today tech stocks rebounded back after a difficult week. This was because the yield of 10-year treasuries actually fell below 1.5%. That was good news for Apple, for Microsoft, for Facebook. They actually helped lift the NASDAQ 100 up about 1.5%. Not so good news, though, for energy producers and banks. Not bad news, but they just didn't perform well. They dragged down the Dow Industrial Average a little bit there. The dollar did jump for a second day in a row, and this helped sort of fuel a slump in commodities from oil to gold to copper. We will talk about oil a little bit more in a second. One thing I'd like to mention is that Asian shares did tumble in line after Thursday's securities trading in the U.S. Same thing with Europe. But global bonds did stabilize after central banks gave some guidance and seemed to have calmed any immediate panic. Also, I'd like to notate that the Federal Reserve Chairman actually said that higher Treasury yields reflect optimism on the outlook for growth, and that officials have stressed that the central bank has no plans to tighten policy given lingering weakness in the labor market. So if they see weakness in the labor market, what he's saying is he shouldn't tighten policy, and as long as that holds true, that would fare well for the securities markets as well. Another thing I'd like to talk about is going to be yields on intermediate to long-dated maturities. These are surging pretty rapidly, and this suggests a reflation that spurs the Fed to pull back on stimulus. So you can see this happen back in 2016 around Trump's election, and now around Biden's election. Obviously, we haven't completely or fully realized the gap up quite yet. We will see what that gets to, but I would like to notate down here, it says in the market bleachers, there's some big names. There's a Harvard professor and an IMF chief economist that are warning of economic overheating from the almost $2 trillion stimulus bill that Joe Biden aims to sign next month. That might sort of imply that some of the PEs are unnaturally high. Another thing I'd like to talk about is just Warren Buffett and his Buffett Indicator. This is because his 2020 shareholder release is going to be pretty soon. I think it's actually tomorrow. But despite the pullback, one closely watched indicator suggests the broader market might remain a little bit too pricey. This is called the Buffett Indicator. That's kind of what it's called in smart money groups. But essentially what it is it's taking the Wilshire 5000 index, which is broadly viewed as representative of the overall stock market, and it divides it by the annual U.S. GDP. This number is hovering around a record high. So at the moment, it's sitting at 187.5%. That is up quite a bit from the 175% or so that it was at last quarter. I will say that it is down from a record high of 195.7%, but that was hit just a few weeks ago. And most importantly, this figure remains well above 159.2%, which was the figure that was seen just before the dot-com bubble. So based on the historical ratio of total market cap over GDP, again, it's currently 187.5%. It is likely to return a negative 2.5% a year from this level of valuation. Basically, what that means is if we're to use the Buffett Indicator as any reliable indication of where securities are going to go, based on the fact that it's as high as it is, historically, securities are going to yield a negative 2.5% return. Next, I'm going to talk a little bit about Dropshot. So Dropshot is something that's definitely very hot right now. It's something worth discussing, especially because just of the pure amount of money going through a Dropshot at the money. So I'd like to read this out. NBA Top Shot has done over $230 million in transactions since its inception in October 2020. That's very impressive, of course, but this is the most important part, with 90% of it coming in the last month. So that's going to be most of 230%, most of $230 million actually coming within the last 30 days. That's very impressive. So NBA Top Shot, it's an online-only marketplace where users can buy, they can sell, and they can trade NBA highlights. It basically uses blockchain technology to identify a user and say, yes, you own this, and you own this. You're able to verify what people own, and you're able to actually sell these virtual assets as well, much like a trading card. So like a baseball card or something like that. But unlike a trading card, it won't degrade in value due to, spilling coffee on it or anything like that. Its value is whatever others assign to it. And then one thing I would also like to notate is that all Top Shots are officially licensed by the NBA. The league partnered with Dapper Labs, a company that specializes in blockchain, to develop NBA Blockshot. So looking into that wouldn't be a bad idea, but the fact that it's sponsored by the NBA is certainly a good sign for Top Shot. Let's go ahead and take a look at the SEC suspending trading activity. So the SEC actually today suspended the trading of 15 different companies because of quote-unquote questionable trading and social media activity. This seems to be a recurring theme, so we'll see where this goes. But I'm sure that, some stocks that were going to continue to go up failed to do so as a result of some of these stops. Now let's go ahead and take a look at what to expect in the coming few days. So we do have the Berkshire Hathaway annual report that I mentioned previously and its annual letter to shareholders. This actually is a big deal. It's a market mover because whatever he says actually matters. People listen. So if he's going to say, hey, the stock market's going to crash, it's probably not going to fare so well the next day. But mainly what you should be looking at in that annual letter is any commentary on Chevron, Kraft, or Verizon, as Berkshire does own stakes in all those companies. Also, a couple things coming up. This would actually be on March 1st, but stocks with a high level of volatility implied by options trading anyways include these stocks here. So if you own any of these stocks, go ahead and just watch out for March 1st because that's going to be a tumultuous time for sure. We have Kim Farm. They're waiting for FDA approval for its investigational therapy. If that passes or if it gets approved, obviously that's going to be big, and if it doesn't, that's going to be detrimental. We also have a lot of data coming out. So we have the gaming revenue from Macau. We have U.S. auto sales for February. We have Chinese auto sales for February. We have discount broker DART numbers. We have background checks, and we have Class 8 truck orders. So obviously that's going to be relevant to a lot of different sectors. The energy market is going to be paying close attention to this conference this week. So if you are invested heavily in energy companies, go ahead and just pay attention to this right here. And finally, Acadia shareholders will vote on the buyout by Cisco. There is a lot more going on, but we will talk about it as that time comes. Next, I'd like to speak about United Airlines actually paying out $49 million to settle mail fraud charges. So they did do this to resolve some criminal charges and civil claims relating to fraud in the Postal Service contracts. And this was just for transportation of international mail inappropriately. Doesn't seem to be affecting the actual stock negatively. At last check, it says it was up 1.7%. Next up is oil. So this is definitely an interesting one to me, something to keep an eye on. So U.S. oil prices have skyrocketed 69% since November's election, based on Thursday's close at $63.50 a barrel. The next closest post-election rally, it says, occurred when crude jumped 31% after George H.W. Bush's victory in 1988. So 31% versus 69%, that's more than double. And these monster gains, it says, in the energy market are not about politics or even policy. Rather, they underscore a growing sense that the worst of the deadly pandemic is in the rearview mirror and that the U.S. economy is poised to roar back to life. That may well be, but again, this is a bigger jump than we have seen in a long, long time or even ever in history. So it's something that I would definitely be keeping an eye on. All right, so next up is going to be a company called Too Simple. It's actually very interesting. It's an autonomous trucking company. It's gained some momentum with a lot of financing from Chinese investors and then some from U.S. freight hauling companies as well. The company has filed to go public in early March. Morgan Stanley would be the leading banker on that IPO. Too Simple raised $215 million in its first financing round. It's valued at $1.2 billion. They actually declined to state their latest valuation, but regardless, the reason this is important and has gathered attention is because it would make long-haul trucking cheaper and more efficient, in part because self-driving vehicles wouldn't be bound by federal limits on how long drivers can be behind the wheel. So obviously a truck can drive 24/7, a person cannot. If they can remove the human component from the equation, trucking companies are going to do significantly better from a profit standpoint. And then finally, I'd just like to talk about Robinhood real fast. So Robinhood is in talks to pay out a fine to settle investigations into its options trading practices. I'm sure a few other things as well. The outages that all occurred March 2020. And these could lead to losses of $26.6 million. I'm sure that this is just the first step into a series of legal probes into Robinhood, but this is one to look at for sure. Other than that, though, I will continue to keep you guys updated on Monday, but hopefully you learned a little bit today, and thank you for your time.